Let's check in and see how markets have been reacting. Emmanuel Macron's win helping push the euro to its highest level against the dollar since November. Our business editor, Stephen Carroll, is here with more.
Well, it was on the currency markets that we saw the first reaction to this. The euro hit a one-year high against the Japanese yen in trading in Asia and also nudged up against the dollar to just over $1.10. Now, as the trading day has gone on in Asia, we've seen those gains be slightly, I suppose, erased as time went on, although we can see still the euro trading just under $1.10, so still close to that earlier peak that it had, and of course much higher than it would be if you go back even as far as a month when the dollar was trading, or the euro was trading for just under $1.06. On the stock markets in Asia, we've got gains on the Nikkei in Tokyo trading back underway there after a 5-day holiday. So it's not just the French election that Japanese investors are looking at now. Gains too on the Hang Seng in Hong Kong and on the Kospi in Seoul, just the Shanghai Composite showing us some red there. And if we look ahead as well to the European market open in about 35 minutes time, this is the picture on France's leading share index over the past month, the CAC 40. You can see shares falling there in the run-up to the first round of voting as investors were worried about what the outcome would be. We had a huge rally on the day after the first round of elections 2 weeks ago, and we can see that really continued over the past 2 weeks, finishing up at that level of over 5,432 points at the end of trading on Friday. We are expecting the CAC 40 to open higher later today as well. Well, for a bit more on this, we can go to London and speak to Craig Earlham, Senior Market Analyst at Oanda. Craig, thanks for joining us. Is this just an enormous sigh of relief we're seeing on the markets today that Emmanuel Macron has been chosen as president?
Absolutely. I think what we're going to see today is a bit of a relief rally. I guess the question is going to be just how long it's going to last. As you mentioned, since that first round, we did see that rally in the equity markets, which showed that confidence was growing, that Emmanuel Macron was actually going to defeat Marine Le Pen and defeat her with relative ease. We saw a little bit of caution towards the end of last week, which suggested that we've had too many bad experiences before and people just wanted to allow the election to pass and hopefully pass successfully, which it did from a markets perspective. And like I say, now it's just a question of how long it lasts. We look at how the euro's traded overnight. We popped above 110 early in trading, and already we've seen that pair its gains and actually now is in negative territory on the day. So, like I say, it's a case of longevity now. I think there was a lot of confidence in the result, and the result is exactly what people expected.
Is this an endorsement really of Emmanuel Macron's policies, or is it just the fact that it wasn't Marine Le Pen that won because the markets were afraid of Marine Le Pen?
I think it's predominantly the latter. I do think Emmanuel Macron is actually going to be good for French growth. I do think he is going to promote European values. He's talking about things like lowering taxes. I think he's going to adopt very much a pro-business agenda, but I think the reaction we're actually seeing in the markets is just relief that we're not going to be talking about Frexit, which is a term that we can now hopefully be saying goodbye to. The fact of the matter is, following what happened in the UK, I'm not sure that the European project could have withstood a similar route for France. So this is a huge sigh of relief for the European project, and what the markets ultimately want is stability. And if that means a low growth environment versus a potential breakup of the EU, then so be it.
This was a big year of political risk, Brexit talks getting underway, the French elections, German elections to come. Do you think markets will be taking a bit more of a calmer view now of the year after this result?
I do think that they'll be taking a bit more of a calmer view. The next risk, of course, is the German elections, but that poses very different risks to what the French and the Belgian elections, the Dutch elections, posed. This is a case of whether Angela Merkel can withhold her seat. The regional elections over the weekend suggest she's in better shape than what people previously feared. The next major political risk for Europe now over the next year is going to be the Italian elections. Once again, we've got Beppe Grillo's five-star movement, who are performing very well in the polls. He's been a very popular figure and growing in popularity over the past few years. So that's the next major risk for the European project. But I think that's a little bit of a way off yet, and therefore the markets do have a chance to actually celebrate the first two election results of the year.
OK, we're out of the woods, but not yet. Craig Earlham from Oanda, thanks for joining us from London.
A lot of reaction from the markets. You'll be back in about half an hour's time with the European markets opening up. That's it for